Well, hello, trade pros. Hope you guys are having a spectacular day. Today is December the 19th of 2019. It's George Papazov Trade Pro Academy. And I actually put the date of today's webinar on this thing. Who knows what this thing is? I finally received it yesterday as a gift. So I tried to put the date on it, but it had to stay flat in order for me to show it to you. All right, this is an abacus. This is the 4-1 abacus that my good friend Steven sent me. I received it yesterday, and it was kind of fun. I was playing with it and discovered how really fun counting is when you put it like physically with fingers. There's like rules. There's the heavenly numbers on top. There's a whole, and then the earthly numbers below. You can only push up with your thumb and down with your index finger. It's a whole bunch of rules, and in today's age, what kid, if you gave this to a kid for Christmas, they would throw it at you. But you know what? I gotta tell you, the experience was very special. And so thank you, Boxy. I got it. The abacus is here, and it's going right beside the gong, which Victoria says is cultural appropriation. But hey, let's get started. Today we have a great morning market update for you. Um, we have actually one key news event and some more updates. First and foremost, Donald Trump yesterday, the House voted and he is officially impeached on 2 counts. Article number 1, abuse of power. Article number 2 is obstruction of Congress. What a lot of people don't understand about impeachment is that it's not a verdict. It's pretty much the commencement of a trial. It's like a charge laid against somebody. You are charged on these counts. All right, great. You still got to prove it. There's got to be a trial. And so Donald Trump becomes the 3rd president ever to be impeached. But in order to be removed or convicted and then removed from office, they'll need to have a 2/3 majority in the Senate, and it's going to be very hard to do. I think there have to be 23 of 57 Republicans that vote in favor of it. It's not going to happen, considering not a single Republican voted in favor of the articles of impeachment to begin with. So it becomes 3rd president after Andrew Johnson and Bill Clinton to be formally or officially impeached. Nixon had impeachment inquiry but wasn't impeached. All right, now how does the market do during these impeachment things? Because you would think, this is huge news, but it really isn't, and the market hasn't really reacted much. So Donald Trump gets impeached yesterday. We go down from 3201.75 to a low of 3194 half. All right, so 6 points, and we're at the bottom of the range, close to the bottom of the range where we've been for the last 3 days. The S&P fell 5% or 4.9% on October 8th of 1998. I actually remember this. I was young. I remember it. I wasn't trading at the time, but it was 3 years before I started trading. And so this was the day that the House voted to begin impeachment proceedings against President Bill Clinton. All right, by the time Clinton was acquitted by the Senate in February of 1999, the index was up 28%. All right. And so that's, Bill Clinton had an era of quite a bit of market gain. So that's one of the 2 times before this that an impeachment is taking place. Another time was an inquiry against President Nixon. So Nixon wasn't impeached on February 6th of 1974. I wasn't alive this day, so I can't tell you that I remember it. But the S&P 500 fell around 30% until his eventual resignation due to the Watergate scandal. All right. Many other things are at play. One of his most notable things is the removal of the gold standard. It's funny, it's very coincidental. I have 3 books on the U.S. Depression and 1 on the gold standard that I'm reading on the bookshelf. That's going to be my holiday read. I need to read up and brush up better on this time period, and I suggest you all do as well. Ray Dalio's book is pretty good, The Big Debt Crisis, but I want to do some deeper reading. But Nixon's the one that removed the gold standard and essentially turned the U.S. dollar into a fiat currency, meaning it's not backed by anything. And that's how this record growth and debt bubble has been able to be fueled. All right, so very interesting stuff. That's how the market's performed, obviously, because in today's age versus 1998, technology has allowed information to spread so much more freely and really pretty much on time. It's hard to keep a secret that we've already known this was going to happen. So this isn't a big new unknown factor like, oh, he's impeached. We knew he was going to get impeached in the House. And we also know that the Senate's not going to convict. Therefore, he'll stay in office. And Donald Trump, if he wins in 2020, all right, will become the first president in history to be impeached and even if he doesn't win in 2020, All right, he'll become the first president in the U.S. history to be impeached and be nominated for election by the party. All right, that's history. Even if he wins or not, if he wins in 2020, he's obviously going to be the first as well. If he's going to be the first to be nominated, then he'll be the first to also win the election. So there's that. All right, in the repo markets. So the summation of that is it's not really that big of a deal, but it is. But it's not. The market doesn't really care. In the repo situation, there's another year-end. There's another Tesla market year-end liquidity that starts today. We'll have those repo numbers for you. They're not up yet, but there's a 35 billion 14-day auction for an overnight repo. Not overnight, but a 14-day repo, which means it gets through the year turn, where the 2019 year ends, 2020 begins. All right, it's going to be interesting to see how many bids show up for this. Remember, on Monday, the 30-day auction was way oversubscribed. More people wanted to borrow the money than the Federal Reserve had allotted. Therefore, that shows a demand for liquidity, a shortage of it. Today's another key test because it's a 14-day lending facility. All right, overall in today's markets, things are pretty much flat. Japan's down 0.3, Hong Kong's down 0.3, China flat, India up 0.3%. Not too much movement in Europe, London, Paris, Frankfurt, everything's flat. Actually, Frankfurt's down 0.3%, not a big deal. In the U.S., futures, Dow and S&P are flat, and NASDAQ is flat as well. Where have all the traders gone? Ho, ho, ho. They're taking vacation, and they're realizing that this year won't be like last year. There's a very stark and really opposite situation this year to what was happening last year. Remember last year, leading up to Christmas Eve, the markets were in free fall. They were down at one point almost 20%. On the S&P 500. So last year, though, there was a lot of things that were going on. Corporate earnings were decreasing and decaying. The Federal Reserve was really jacking rates up quite strongly, for lack of a better term. They were draining liquidity from the balance sheet. So they were super, super hawkish, and the market dumped a lot. Ever since then, the Fed's done a 180. They're now printing money and buying bonds with it, 60 billion. They're offering repos left, right, and center. Anyone wants money here? They're just making it rain all over the place. The Fed's doing. It's a totally different dynamic. There's a phase one deal done, and so the market doesn't really give a crap about anything else. It's going to hold these highs, and I think it's going to even go higher into the year end. But it's slowed down, and because the market slowed down, we've slowed down. I got to tell you, yesterday we traded the oil inventory report. It was fantastic. I didn't make as much as I wanted to. Our oil leader, our fearless oil leader, did the best, and I think the best. I mean, some of our members might have outperformed. But I think I talked to him yesterday during the webinar, and we say, you know what, this feels like it might very well be the last trade of the whole year. I don't like to trade and reduce volatility because I don't have to. I've traded well all year, so I could take these last couple of days and weeks off and just relax. And volatility will return the second week of January. So if we look at the calendar, the next really big volatility period is the 6th, Monday, January 6th. Volatility will return a little bit more. Now, if there's some kind of crazy tweet or squawk, obviously there's going to be movement, but I can tell you professional traders, put it this way, if you're away from work and you've taken vacation, other professionals have also taken vacation, and some of them happen to be traders. Therefore, the market doesn't have too many professional traders sticking around. You don't want to be getting into a firefight with a bunch of amateurs. It's not going to work out, I'm telling you. So even though you're home, just relax. Let this thing be. Enjoy time with your family. What can you do during the holiday? You could learn, all right? You could work on your strategy. You can analyze your results. And you can do a crap ton of stuff. You can watch the futures course again that we have. If you haven't watched it, you could try watching it. All right. You could try some software playbacks and learn some things. You could listen to the podcast, of which episode 5 is out today. 5 is building a success mindset. That is hands down my favorite one up to the first 5. It's mind-blowing. I even had to do a sound effect. You guys should listen to it and watch it. I will put the link in the description, or go to podcast.tradeproacademy.com. Or if that's too many dots for you, marketmind.online. It even rhymes. All right. That was once in Dr. Seuss' book. This morning we had initial jobless claims at 8:30, and they came out at 1.722 million versus 1.68 expected. That is not a good thing. More jobs or more people filed for unemployment, but it's not too much of a deviation to matter. That's the continued claims. The initial jobless claims are 234 versus 225. Again, 7,000 jobs higher. The previous was 252 So it's weaker than the previous number. It's less than the previous number, which is good, but it's higher than expected. It's not that good. It's a mixed report. I don't think anyone's going to care about this, to be perfectly honest with you. And on the economic calendar, 10 a.m., we have existing home sales and leading indicators, 10:30 natty gas inventories, and 4:30 the Federal Reserve money supply and balance sheet. And that's about it. Mark, did you just post that? Thank you, brother. Really appreciate it. Mark, you just posted the link down there. Check your chat box, podcast, TRADEPROacademy.com. Watch episode 5. I guarantee you guys, it'll help you more with your trading than any strategy, indicator, system, guru, any other crap that's being peddled out there. This will help you more, and it's freaking free. Merry Christmas. I am Santa after all. If you guys have been good, put what you want in the comment box, and I'll get it for all you guys. I'm just kidding. I can't afford that. That's 25,000 members. Probably could, but it'd be the last thing I do. And we have a lot of growth plans. Swedish bank also, last piece of news. I didn't write anything, but the Bank of Sweden, the Reserve Bank, actually raised rates back to positive. So they're going to a more hawkish cycle from a negative environment, and that ends a half decade of easing for them. So that's interesting. Let me see some comments here before we get started. You can trade in a simulator. There you go, MB. You absolutely can trade in a simulator. Ibrahim says that's a Japanese abacus. Chinese one has 2 beads. The 2 and the 5, right? It has 5 at the bottom, 2 at the top. It's a different counting system. Same stuff. It changes a little bit. Waiting for the podcast. It's really helpful. Dimitri, you don't have to wait for it. Click the link. Oh, recommended to my friends who are not trading and they love it. Thank you guys for your hard work. No problem. It's mindset focused. It's like trading psychology, but it's more mindset focused. So if you're somebody in business, if you own your own business, if you work very high up for a business, if you manage people, if you manage resources, if you want to succeed, if you're breathing, it's for you. All right. It's a podcast really that casts a wider net. We want it to work on performance psychology, and that's what trading really is. All right. That's it for me. Evan. Email me, Evan. You know my email. Do you think the United States, because you asked, do you think the United States will ever, I'm not promising though, I don't know. Damn, I should have said that. I'm going to have 6,000 emails. Do you think the U.S. will ever have negative interest rates? I do. I do think we're going to get to negative interest rates. I think we're going to get there globally, not just the United States. I do think that's coming. All right. Not now, but at the next recession, because we've cut so low, we don't really have too much to cut on the interest rate front. All right. So from here, the next recession is going to need a lot more to kind of keep up the optimism in the market. This whole system is being run on the fact that people borrow more. And if there's no growth, borrowings tend to cost more, and the whole thing collapses and unravels. All right, that's what I got for today. Love you guys. Have a great rest of your day. We'll see you tomorrow for the last morning market update of this week. And we're going to do some next week, but it's going to be, we're not trading in the room all week next week. You shouldn't either, but I'll do some morning market updates. You guys take care. Love you all. Great day and goodbye. Box, I'll send it to you to cover oil.